Let's cover a few things with Infinity Scalper. And one of the problems that people have asked me about is what happens if you're sticking to the times of an 8 o'clock start time for New York session, or 3 o'clock for London, 3 o'clock in the morning if you're on the New York time. What do you do, especially when you get these big, strong greens, which do not give you any short setups and don't let you take part in this run? And this is where I spoke about earlier in another video about using multiple time frames. So let's assume for a second that you're trading the New York Times time, and that's 8 o'clock in the morning. So we want to start here. But you can see that we've already got a long trade set up. And I did talk earlier in another video about getting in sync. So if price is still in the exact same zone, right, the same zone, you could consider getting involved in a trade like that. Just remember, though, the longer price just meanders about, you're looking at explosive moves, which is a good thing. And you also don't want to be stuck inside of ranges like you see here. Trading inside of ranges can be deadly, especially on lower time frames, because there's not a whole lot of room between support and resistance to trade them. And a lot of times what happens is you get the big strong breaks out, right? And price will just pull back into it. That's just a natural evolution of price. And what to do, it catches traders. And you can see that a lot just before the opens as well. So how do we do this? How can we take advantage of this nice, huge move of almost 70 pips in the euro yen? Well, we come into our session, 8 o'clock, which is over here. We just look to see what we're in. We are in green, which means we are looking for buy setups, only buy setups. Okay? And this is where you might want to consider not using the 20 period moving average that I put on here for trend. Okay? We can see we're in a trend on this time frame. So let's drop down to our minute chart. And where's our start time? So here is 720. This is obviously from the higher time frame. So what you would do, and even on this moving average, you could just see that we're basically flat, just coming off of up moving average. So you would ignore the shorts anyways. We're only looking for longs because past this green line on the 5 minute, it's all going up. So your trade is at 746 right here. Okay? 746. Now, that is not our time, is it? What's our time? 8 o'clock. So let's move over to 8, which is right here. So we'd still miss that move, right? We wouldn't get involved in this little peak up. But look what happens. Moving average flattens out. Price moves down. We get a short setup. We don't take the short setup. Why? Because our green arrow from our higher time frame chart is telling us that there's only one thing we're looking for, and that is long setups. Okay? And 837, look what we get. We get our move. And this is why I say ignore the 20 period moving average on this time frame, because we are using the trend from the higher time frame. Okay? And we see here at 837 is our long entry, and you can see that price rallied up 40 pips. And here's the exit around here. So it doesn't look like a big trade now, does it? Because you're on the 1 minute chart. And on 1 minute charts, you're going to get these big thrusts against you, right? Which doesn't necessarily mean the trend's over. It just, you got to be aware of that. Now, can you use price action? Well, let's take a look. In the PDF, it does say, look at using structure for targets. So you can do that. So your first structure is right here, and you would get out on that. And we also have our optimal exit, which is right here. And this area right here is not a bad place to get out of your trade, is it? So you're looking at, 17, 18 pips. So at least you got part of this move. Or you could say, well, I'm going to wait until my pattern of higher highs and higher lows has been violated. And when does that happen? Well, we've got our high here, right? We've got a higher low than this one. Boom, we put in higher high. So now you can say, okay, well, wait a second. If this violates down here, I'm going to get out of my trade. Okay, if it breaks this low right here, it means we have put in a lower high. And if it breaks through here, we're going to put it in a lower low than this one, right? So you're looking at here, 25 pips. Okay, so keep that in mind. You can use the other time frames. Just make sure you understand what you are doing. Okay, let's just take a quick little look at what happened in the London session overnight. Well, we had this nice range, and out of these ranges, right, you usually get some really good moves when price gets going. And here's that fake down, right? It's a short trade, but here's our start time is not until 3 o'clock, which is, well, wait, where is that? Right around this area right here. Okay. So what do we have? We have a breakout. Price moves back, right? It's that retest of the bottom. So it used to be support. It's potential resistance. And you can see it's resisting, but it's not resisting, right? When price meanders, I'll give you an example here. This is just trading knowledge here. If you've got a resistance level right there, and price, it's doing what it's doing. It's moving up. It's moving around. And it comes up, falls down. It's doing this. And then it starts to do this. Basing below these. These are some of my favorite trades to get involved pre-breakouts. That way, when it does break out, traders are looking to trade the break. Traders are staying on the sidelines, ready to get in when it breaks. Just propels your trade upwards. So when you see basing like this, it's actually a good setup. That's just an alert. Okay, so what do we have? So London, we have our first setup here at 340. And you can see what's great here is it's breaking above the range on the side, and that's always a good sign. So you would get, on this trade here, about 20 pips before you get this. If you're waiting for the reversal, you're getting roughly 24 pips. And again, it depends on your account size, right? How much that really is for you. There's one more thing I wanted to bring up. And this is not a trade setup, even though you do see this. It's outside of our time frame. This is more of the Asian session, which, generally it's not a great time to trade, but this is here is 31 pips. On higher time frames, obviously, it's a smaller range, but this is a 5-minute chart. What I want to point out is, markets mean revert, right? That's what markets do. Markets will trend, right? They'll pull back. They'll trend. They'll eventually consolidate, right? That's what they do. They pull back. That's what markets do. It's called mean reverting. Markets do that. So one other way you can use the 20-period moving average is if you get a setup, let's say a candle breaks down like this is doing here, and you get a setup that's lining up too far away from the moving average, be very careful that you do not get a snapback in price. Now I say be careful, but there's nothing you can do about that. So in your trade plan, you're going to have to decide, if I get this big space in between price and the moving average, and I get a trade set up down through here, right? You're going to have to decide for yourself what's too far, right? You get that with your testing. You can say, well, you know what I'm going to do? I'm going to wait, and I'll mark off basically where the entry was. And if price comes back up into that area, then I'll take a trade. Or you could just, take a run at it, and then suffer through any drawdown in the trade. It's entirely up to you how you trade it. Just know that markets mean revert. All right, so when you start getting, and you see it over here too, markets pulling away, pulling away, pulling away. And this is this 20-period moving average is just the average of the last 20 bars, right? So when we get these pullbacks, obviously the average is getting smaller because you got the bigger bars, right? You got the price moving up, then price pulling back, price declining. So the average gets smaller. So obviously the moving average is going to catch up to price. All right, allow it to do that. Okay, so just be careful. Even though this trade is at 335, and this is the pound yen, and it depends on where you get out. You could have had a pretty, almost a 40 pip trade on this one, unless you're trading structure. I don't know what's off the left here. But if prices move too far away from the moving average when the signal shows up, have some patience. All right, there's a lot of currency pairs you can trade. You don't have to fight to get involved in a trade that's already underway, but it's too far away from the moving average. Okay, wait till it pulls back, or you could just drop to a lower time frame. So you would just put your line there. You would drop down. Make sure we're not going to get too far over here. Let me just get rid of this one. We'll just see what it looks like. So we're looking for an up move here. Where does that change? Let me just put another line in so we can see where that changes. Right there. So let's just drop down to our minute chart and see what would have happened. There we go. So we're up, 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 down, 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 down. We don't take it. Here's our up move right here. Now, you decide, again, are you going to get out? How are you going to manage your trades? Are you going to use this for an entry right here and then just use the higher time frame for your exits? Not a bad idea, right? Because on lower time frames, you're going to get a lot of these moves that on the 1 minute chart will trigger directional trades, right? In the opposite direction. You get a lot of these, right? Depending on how volatile the market is. But then, look at your moving average if you're just trading the 1 minute chart. But you might want to decide, are you going to use the 5 minute chart exit, right? This just allows you to get in. How are you going to get out of your trade, right? So always keep that stuff in mind when you're trading, okay? Trading is not, you don't just trade blindly, okay? You can't. Then you're just asking for trouble. Anyways, click below, grab my link. You can also grab it up here on the right. Thanks for watching.